Hello, let us look at how to prepare the statement of changes in equity given a question, okay? And basically, the statement of changes in equity, before we proceed, it shows the movement from the opening balances of equity and then the movement that has happened during the period. Then we get to the closing balances of equity as at that period, okay? So this is basically being able to track equity movement during a certain period, okay? Now let us look at this question, okay? So we are told an extract from the statement of financial position of Talo Limited as at 31st December 2024 shows the following details. So we have been given an extract of the balance sheet for Talo Limited as at 31st December 2024. So basically, they have given us an extract of the equity part. Remember, the balance sheet usually has the assets part, then the equity part, and the liabilities. So they have given us an extract of this statement, but only at the equity part because that is what we are looking at. Okay. Then the question further says that during the year ended 31st December 2025, the following changes took place. One is that 1 million ordinary shares of nominal value Kenyan shillings 1 were issued at a price of 2.5. Okay. Then a non-current asset currently valued at 2 million was revalued at 2.5 million. So as at year end, this non-current asset was revalued at to 2.5 million. Okay. Then, then a transfer of Kenyan shillings. A transfer of Kenyan shillings 100,000 was made from the retained earnings to the general reserve. Okay. Then the profit for the year ended 31st December 2025 was Kenyan shillings 800,000. This is basically coming from the statement of profit or loss and other comprehensive income. Okay. So when you prepare it first, you're going to get the profit for the year, which is very advisable. You prepare your balance sheet, then prepare your statement of profit and loss, then come to statement of changes in equity. Then ordinary dividends were paid. Ordinary dividends paid were Kenyan shillings 200,000. Okay, so first, once we're told prepare, our question is prepare a statement of changes in equity for the year ended 31st December 2025. So we indicate the name of the company, Talo Limited, and then we indicate which statement it is based as usual, and also mention the period in full, please. Okay. Then let us look at the format of this statement. So this is a format of the statement where we list all call them what all the items we have on equity. If you can see from what we had, the closing balances we had in the previous period, you can see we had share capital, we had share premium, revaluation, reserve, general reserve, and retained earnings. Okay, so list all these items. Okay, and then the first thing will be the balances at the beginning of the period. The balances, these are basically the opening balances. And now you will come to understand that is the reason why you are given this extract from December 2024, 31st December 2024, because these are the opening balances in the period of January 2025. Okay. Remember, we are preparing the statement of changes in equity for the period ended 31st December 2025. So the opening balances in January 2025 are basically the closing balances in December 2024. So how this we are going to fill in here because this is our opening balances. So in our share capital, we have 2 million. We have 2 million. So share capital, we have 2 million. Then we have premium, which is 500,000. Then our revaluation is 1 million. 1 million. 1 million. Then we have general reserve, which is 600,000. Then our retained earnings is 1.8. 1 0.8. Yes, this will give us a total of 5,950,000. Okay, so these are basically our opening balances, which you've gotten from the previous period statements. Okay, so then now let us look at the movement. After that, what we list is basically the movement that we had that has happened during the period now year 2025, where we started with being told that during the year 1 million ordinary shares of nominal value, they have a nominal value of 1 shilling each, were issued at a price of 250. So we need to know the share capital, and we also need to know the share premium. How do we know the share capital? The share capital is basically taking the number of shares and multiplying them by the nominal value, which is 1 million. So that will give us basically 1 million. But now the question comes in, what is the share premium? What is the share premium? The share premium is the excess of is the excess from the nominal value. Basically, the amount that is above the nominal value, because we are told the issued price, that is the price that this investor is willing to buy, was 2.5. So basically, the investor bought this one share at 2.5, and the nominal value was the nominal price is 1. So share premium comes from the difference of these two. Okay, so which is basically 2.5 less the nominal value, and then now we multiply by 1 million. That should give us the share premium, which is basically going to be 2.5 less 1 multiplied by 1 million should give us 1.5 million. Okay, 1.5 million. So basically our share capital is 1 million, our share premium is 1.5 million. So that is the change during the period. So we can indicate under share capital that one of the movement that has happened is we have an increase of 1 million. Then for our share then for our share premium we have 1 million, 1.5 million, 1.5 million. Okay, then let us look at the next movement, which is non-current asset currently valued at 2 million was revalued at 2.5. So we have reevaluation has happened. As mentioned, we do reevaluation. There are items like land. What happens to them? They appreciate. Okay, they don't depreciate. So land you could have been worth less, but now it is worth more. Okay, so we usually do that reevaluation. Okay, and now what we do is we usually have a revaluation reserve. We add the value of the asset, but we make sure we maintain also under equity a revaluation reserve. So we've been told this land was 2 million, and now it has been reevaluated to 2.5 million. Okay, I just said I assumed it was land. Okay, it could be a building. A building could also appreciate where it is, basically, depending of other factors, even environmental factors, maybe in a city or the place is growing. Okay, so there is that aspect. So we less, so it's going to be 2.5 million, we less 200, which is going to be basically to give us 500. So this is our movement during the period. So we are going to come and indicate under reevaluation. Now in the reevaluation reserve, an increase of 500,000. Then we come back, and then we are another movement is a transfer of Kenyan shillings 100,000 was made from the retained earnings to the general reserve. It was made from where? Retained earnings to the general reserve. As the statement says, that's how we should show the movement. It was made from the retained earnings. So from our retained earnings, you're going to less 100,000. Okay, and move that amount to our general reserve by adding it there. Okay, So we've just moved from the retained earnings, so we've less, and then we have taken that addition to the general reserve. Now let us look at the other. The other is, we are told the profit for the year ended 31st December 2025 was Kenyan shillings 800,000. So that one is usually added to our retained earnings. Basically, the retained earnings comes from the profits, and then we distribute them if we're paying dividends, if whether it is moving to our reserves. Okay, so here we are going to add retained earnings. Our profit for the year is, you can see this is profit for the year. Okay, we are adding to the retained earnings 800,000. Okay, then we are then told ordinary dividends paid were Kenyan shillings 200,000. So what do? Dividends, remember, it is a payout, and it is a payout from where? From the retained earnings. So we come and less 200,000 of these dividends paid. So now let us look at the totals. Here we are going to have 2.5 million. 2.5 million. Then we're going to have a revaluation balance of 500. Then it's going to be 0. Then profit for the year is 800,000. Then we have less dividends here. Then, so what are our balances at the year end? For the share capital, the balance will be 3 million. It will be 3 million. Then our share premium will have a balance of 2 million. We'll have a balance of 2 million. Then our revaluation reserve will have a balance of 1.5 million. Then for the general reserve, we will now have a balance of 700,000 because we moved the 100,000 to the general reserve. Then for the retained earnings, we're going to have 1.8 million. 1.8 million. We less 300,000. We less 300,000. Then we add 800,000. So that one is going to give us 2,350,000. 2,350,000. So we add 700,000 and we add 1,500,000. Add 1,500,000 and then we add 5 million. It is going to give us 9,550,000. Okay, so basically that is how we prepare the statement of changes in equity. Being able to just follow up, first you ask yourself, what is the balances at the beginning of the year? You list them. Then look at the movement. List the movement that has been happening to equity. Remember, you won't find anything on equity in the profit or loss. When it comes to dividends, they come to the statement of changes in equity. Okay, you will see on the balance sheet, we are looking at the balances or as at a particular period, but what the statement of changes in equity does is it represents the balances at the beginning, the movement during the period, and then you will be able to get the balances at the end of the period. Okay, so that is basically how we prepare the statement of changes in equity.